Kevin, is this market one that is worrisome to you in the idea that this could be the beginning of a much, much deeper pullback? Or is this something where you say this is a bottoming process taking hold?
Well, Dom, I think it's worrisome. That we can't ignore in any way, shape, or form. It was a horrible, brutal week last week. The futures are telling us it's going to bleed through into this morning. And markets are absolutely learning how to take a punch. Now, in respect to your question, I think we're closer to a bottom than a top. But the real problem is that a bottoming process can take a long time, especially when we factor in a best case inflation narrative. So this could go into the summer, through the summer into the fall, and possibly through the fall into the winter. So getting this under control isn't going to be easy. It's going to be a tough bottoming process if we've even started that. And we're not going to enjoy a V bottom like we've seen so many times in the past few years. So
if this is the case, does it change at all the calculus in your mind for how the Fed meeting goes later on this week? They've already witnessed the volatility from last week. They're watching what's going to happen early this week ahead of this big Fed meeting. What has to happen, I guess, is the best way to put it, for the Fed to alter its approach to what's happening with the economy? Or is the inflation data so pervasively bad that they have to stay on track no matter what?
Well, I think it's so pervasively bad that if anything, they would want to accelerate their tightening process. But this Fed has been so careful about telegraphing what they're going to do and then doing it. I'm concerned that leaving that narrative on Wednesday won't happen. So let's play on this thesis, Dom. They're going to raise rates 50 basis points because that's what they told us they're going to do. Clear the Fed is a little bit behind the eight ball, and that's why the markets are selling off. But what they do have an opportunity to do, and the big news will probably be the post-game presser, where Chairman Powell can sound as hawkish as anybody on the planet. So maybe he could say something like this. Look, we raised rates 50 basis points here for June, but 50, 75, 100, they're all on the table for July. They're on the table for September. And guess what? If we see the data and indicating it's necessary, we may even raise rates between meetings. That type of communication, that type of messaging is what the Fed's going to need to do, at least to get us through this week. It's not going to help inflation day one, but it may placate the market.
And Kevin, before we let you go, really quickly, just a few moments left here. What's your favorite part of the market, given the downturn we've seen?
I mean, cash would be a sarcastic answer, which I'm not going to give you, but I think there's opportunities in financials for sure. They have tremendously rock-solid fortress balance sheets. The narrative that financials would do well in a rising interest rate environment hasn't played out yet. You talked about it at the open. They're in correction territory. So I'd be looking at the big banks. And even big tech, which also is really selling off massively, is going to create some opportunities. It's not timing the market. It's not trading the market. It's using this opportunity over the next several months to accumulate positions in companies that you want to own and continue to make sure they're cash on cash, they pay dividends, and I want to get paid while we wait for times to improve.